James, Mr. Evans.
Gavin.
What do you do?
So I work in the finance industry. My background is pretty much in lending and retail credit, which in layman's terms, I guess, is like home lending. So I approve loans, essentially. I did for a number of years before moving into different roles. But yeah, keen to talk about, I guess, pros of going into your own business and from a comedy standpoint, right?
Yeah, well, I was kind of curious to get you on because I wanted to talk about, I think within like the arts in general, there's like a general lacking of, and myself is included in this, just business savvy, being business savvy. And especially when you're going in as an artist, you're kind of like a business owner, a sole operator.
Yeah.
And the product is the stuff you create.
That's exactly right. And I think a lot of business owners, and it's not just artists, but people who want to start a business, they're so passionate about it that they're going to sacrifice other things in their life to start their business. But a lot of the time, the passion can get the actual product made and things developed, but it's the administration side, the boring stuff that no one wants to do that kind of gets overlooked, and that can really lead to a business failing when it may have solid credentials and a solid
the nuts and bolts of it, It just kind of goes out the window. What's that statistic where somebody was saying like, 90% of businesses fail in their first year?
I don't know the exact number, but it's
that's
a really
obviously
high amount.
Yeah, I think that's the wrong. I think it was like something like around about 60. But my thinking about that as well is like that a lot of people use that statement as saying like, be careful, it's really, really hard out there.
Yeah.
Which it is, but I do wonder about how many of those people are genuinely trying.
Yeah.
You know what I mean? It's like people, I think a lot like, I'm 40, I'm going to open up a restaurant with no restaurant experience.
Yeah, that's probably fair. I think like there's probably a lot of businesses that people start without actually costing it properly as well. Like they don't have the funding, and they can't get the funding from the bank or other lenders, and then ultimately they're trying to put out a half-baked product because what they thought they were going to be able to create is going to be too expensive, and now they create something that's
like a
not
compromise
that good.
on the original thing. Yeah. Now, before we go any further, just one disclaimer: anything we talk about here should not be taken as direct financial advice. Neither of us are qualified to advise you on anything financially speaking, which kind of makes this whole podcast somewhat redundant. But you know what? Fuck off. All right? You don't know me. Anyway, or James here. Sorry, James.
That's all right. I'll just put a qualifying statement to that too. I've done a bit of research here. I'm not an accountant. While I work in the industry, it's a big industry. So ultimately, if you get some inspiration from this, please go and talk to an accountant as well.
Yeah, and do your own research. I have a history degree, okay? I know nothing about financial stuff, and which is why I have James on, who also apparently knows nothing. So let's get into it. Now, I did want to talk to you about, I guess, like the first steps for now. You have helped comedians in the past in terms of helping them with their financial structures. Would that be fair to say? And as far as like, invoicing, creating a business as a comedian, is that right?
That's essentially so. I guess there's a few things I help with, like filing taxes.
Okay.
So income tax and what sort of documentation and records need to be kept for business purposes. And then the invoicing, I guess, kind of does tie into that as well. So, but if you're wanting to turn your, I guess, hobby or passion into a business, then being professional in the sense of having that stuff in order is just going to make it, like if you go to a gig and it's a paid gig and you have the invoicing ready to go on the letterhead, the gig organizer is going to be like, that person was great to work with. It was easy, seamless, we'll do it again, And
let's start with that. So let's say I'm a comic, right?
Yeah.
And I've been doing it as a hobby, and I want to start turning it into, I guess, semi-professional. We're starting to get paid here and there. What are the first steps, I guess, as far as tax-wise that you would think that I should go through?
Yeah, good question. So when you're starting a business, most people who are starting, I guess, as a comic for yourself, you're be what's called a sole trader.
Okay.
And there's a few different business structures.
And this is within New Zealand.
This is within New Zealand.
For all the international listeners out there.
Yeah. So sole trader basically means that you're trading under your own personal name and your own personal tax number or IRD number.
Okay.
And it's actually really easy to set up. You don't need to go through any big legal formalities. You literally just have to inform the IRD that you're going to be a sole trader. You can get what's called a New Zealand business number if you want, but being a sole trader, it's not compulsory. The next step is basically to then keep a copy of all your records, and this can be things that you spend on your business as well. So for example, studio equipment, that could be a business expense. So when you or I pay tax on money that we earn from our jobs, we basically get, say we earn $1,000 a week, we'll get tax taken out of that and we'll get the money that comes into our profits in our hands. Businesses work a little bit differently. So businesses, they will get all their earnings, which will be what you invoice people. And then out of those earnings, you deduct all your expenses. So it might be what you buy for your equipment, travel costs, what it costs to rent venues, anything that's related to that, even entertainment if you are networking with other comedians and that sort of thing. And when you pay your tax on it, you only pay tax on the profit after expenses have been deducted, so the profit.
Okay.
So if you're working another full-time job and it really is just starting this business as a hobby but wanting to grow it, chances are you're going to spend more money on equipment at the beginning than what you're actually going to bring in terms of a profit. So if that business makes a loss, you don't pay tax on that loss, but you may also be able to attribute that to tax that you've paid in other earnings. So you could actually get a tax refund from your first couple of years as a comic while you're starting out and while you're spending more money on getting the equipment and getting established than what you're actually bringing in.
Right. So let's say I'm a comic, I have a full-time job, I'm getting paid $50K a year.
Yeah.
And then I don't set up as a business. I'm a sole trader. Is that what you said?
Yeah, sole trader.
So I'm a sole trader, and then I take in $5,000 worth of revenue from comedy.
Yeah.
I spend $4.5K on miscellaneous equipment, mics, all that jazz, transport to and from, but I keep a record of all that. I'm only taxed, but that $5,000 that I get paid, there's like withholding tax and stuff like that. So am I already being taxed on that $5K, and then I get the refund? So I technically have earned $50K plus $500.
Yeah, so that would be, in that situation, correct. So you would have had $50,000 from your salary, and then the extra $5,000 revenue minus the $4,500 expenses means $500. So you'd be taxed based on $50,000 and $500.
Got you. And the risk is if I don't keep a record of all my expenses, I'm actually getting taxed on $55K.
That's correct.
Right.
Yeah. Okay. Or, I mean, if it's under the table, you wouldn't be taxed at all. But
there's nothing is ever under the table.
No.
It's all above board.
And that's the really important thing, right? If you want to turn this into a business and you actually want to make your main source of living from it, then the sooner you can get from a point where you're just taking cash in hand for the odd gig to actually have an established business with a record of finances, that's when people are going to take you seriously. And if you, well, when I say people, I mean mainly institutions and things like that. So from a perspective of like growing the business, if you wanted to say get credit to put down a deposit for a big venue, and obviously we're talking like a
theater
a big
or something like
sort of
that.
level of growth, then having those ducks in a row, you couldn't just go to a theater and be like, I want to hire this out.
Sure.
Here's some cash. There's actually got to be contracts and terms and things like that signed up.
Got you. That makes a lot of sense. Yeah, that's very. So it's and at what point do you try and become like incorporated?
So being incorporated is what we call in New Zealand, it's called limited liability company. So you may have seen like limited LTD around on buildings. It's basically, you can do that at any point when you want to. And the difference is under a sole trader, you're under your personal name. So everything that was related to the business comes back to you personally. So, for example, if you took a $10,000 loan as a sole trader, then your business went under, you defaulted on it, you're going to pay back that $10,000 loan. In a limited liability company, that company becomes its own entity. So it can actually borrow and save and own assets in its own right. So it might be, say, Gavin Limited took out the $10,000 loan and the company went under. You may not be necessarily be, there are some circumstances where you are, but for this purpose, you may not be liable for the loan payment of that company.
The company is, and if it goes under, then okay, that makes sense. Yeah, interesting. And so that's pretty much, you probably want to get to that point when you're dealing with bigger amounts of money and there's more inherent risks and stuff like that.
Yeah, so there's actually like a website called business.govt.nz, and it's got a little, I guess it's like a tool calculator thing, and they ask a few quick questions for people starting a company, and it comes out what sort of structure is recommended for you. There's also a structure called a partnership, which is rather similar to a sole trader, but it's for like two people. So if it was like you and your mate starting a business, you might go into a partnership together.
Right.
But yeah, that's probably a good starting point for people that are interested in registering a business, is just to do that. It takes about 5 minutes. But if you wanted to, say, sell the company in the future, that may be like a reason to set up a limited company rather than being a sole trader. Because if you're trying to sell your business as a sole trader, you're basically trying to sell something that is you personally. Like if you think about it, like a plumber who's a sole trader wants to sell the business, well, everything that's in that one person's name has to be changed over to the new buyer's name. And that may mean things like going through loan applications and that sort of thing. But if it's a company, then that person that wants to take over the company can just buy the shares in that company and then essentially assume control of the entity without going through all the transfer.
So it's like a lot more seamless than if you just want to buy the company out.
Yeah. The downfalls of a company for like someone starting out is a lot more paperwork and a lot more
what I hear.
Legal stuff.
I do know if you want to like get if you want to get grants and stuff like that, you have to be incorporated.
Yeah.
Which apparently it's not even really worthwhile until you have like a consistent, regular thing going as far as comedy goes. Like we have a show out in Newtown, Line 'em Up Comedy, every month, plug. And we were looking at getting some funding for it, and to get funding, we needed to become incorporated. But the amount of paperwork that was involved on the back end of things, it's like, honestly, the amount of time you'd be spending, you're just better off, just not doing it.
So do these funds exist? Are they like through community organizations?
Gaming funds, there's quite a few. And I think there's also like government grants. I think the government grants do it once every 6 months. Don't quote me on that. But then there's also the gaming funds, like the Lion Foundation, which
it's
I think
like Pokies money.
Exactly. That's exactly what it is. Yeah, and so like you can get the grants from that, and it varies in amounts, but it's anywhere from a few hundred to $4,000 or something like that, depending on the scale of what you're doing.
That's pretty cool.
Thank you for watching that clip. If you enjoyed it, make sure you hit that subscribe button on the left, and if you want to watch the full episode, hit the square on the bottom. To watch another small clip, go ahead and hit that square on top. And if you just want to listen to the full episode but don't have time to watch it, you can find this podcast wherever podcasts are listened to. Thanks. Bye.